Okay, welcome to Blue Orchid's Masterclass, which is part of the New Enterprise Allowance Programme. Remember, watching this video is one of the requirements under the New Enterprise Allowance Programme. We're going to go through various slides, and there's two elements to this masterclass. First part is about bookkeeping, and then the second part is about sales and marketing. If you do have any questions or queries, because this is a recording, please ask your business advisor for further advice and guidance, or any queries that you have regarding any of these slides. If you know some of the information already, brilliant. See this as a catch-up and a refresher on the information that you already know. So this video will last for approximately 2 hours long, 2 sessions of 1 hour each. The good thing is about a recording, if you need a cup of tea, you need a coffee, you can pause this video, go and get the drink, come back and replay the video. You might not want to watch it in one sitting. It's no problem whatsoever. What is important is that you do watch this video. What you will need to do after you've watched it is to confirm your attendance on the video. There will be no chat function because it's a video recording as well. So here we go. The first part is about bookkeeping. And bookkeeping is the activity of keeping records of the financial affairs of a business, and in particular, the financial affairs of your business. So the session goals of what we're looking at, we're looking to give you an understanding of how to manage and control your business effectively and to meet demands of internal and external factors. At the end of the day, we want you to know where your money is at any one point, and that you've kept an eye on where your money's coming from and where your money's going to. It's going to help you to complete the financial sections of your business plan, which again is a requirement under the New Enterprise Allowance Programme. And then look and estimate your potential business performance. We want to look at the viability of your business. Completing financial records like this will give you the evidence that you need to prove that your business is viable. If it's not viable, we need to go back to plan A. So the objectives: to understand the terminology used within finance and look at the kind of bookkeeping system that is best for you. We are all different, and different systems work for different people, so it's identifying the best system for you. We'll show you some practical experience in recording your financial information as well. This is one of the big things that a lot of people worry about. There is a lot of terminology in business. You may work within a certain business sector and you will understand your own terminology. But when it's something that is new to you, it's easy to have your mind blown with all the information that is given you on what something means. What does that mean? What's that saying? We'll look at those. The first two to look at is bookkeeping and accounting, and a lot of people confuse the two. First of all, bookkeeping is the recording of transactions. So it's the writing down of the information. You may have heard of somebody who's called a bookkeeper, and they will just keep the records and will write everything down. An accountant or accounting is the process of tracking that income. So more often than not, an accountant will look at somebody's books at the end of the tax year, track all the income and make sure it is correct. So bookkeeping is recording, accounting is tracking it at the end of the year, doing the ticks against certain things. So why are bookkeeping systems needed? Lots of reasons. First of all, the most important reason is for yourself. You need to know where your money's come from and where your money is going to. If you do not know where the money within your business is, how can you operate your business? As a business advisor myself, I don't want you as my client to worry, have you got enough money today for the business? Have I got enough money for fuel? Can I buy that stock? So it's keeping an eye on your accounts. It's also good when you can look at the figures in front of you and see that the business is doing really well. The hard work that you have put in your business is showing those rewards for you. So it's keeping a track of all your transactions, enabling you to look at your profit or loss. Remember, when your business starts, you might not be making a profit at the beginning. And that's the whole benefit of going on the new enterprise allowance program, particularly if you're on universal credit. It provides that buffer. So if in the first 3 months, the business might not break even, you still have money coming in from universal credits and also from the new enterprise allowance payments as well. We want the business to get to a stage that it becomes profitable for you. Looking at that lets you enable which products sell better, which products are not working so well. So if you're making products and you're not making money on selling them, it might not be worthwhile selling those particular products. Sales invoices, if you are giving an invoice of something that you've done for a customer, and you say, here's an invoice, pay me within 30 days. You need to keep a track of what invoices you've given to people. What I do say to everyone, cash is king. Most of you may just be dealing in cash. Customer buys something from you, gives you cash. You go and do a service for them, cut the hair, mow the lawn, they give you cash straight away. Brilliant, there's no checking up with that. Also, if you're selling online, a lot of items are bought before they are sent off. So you get the money up front. That's the best way. However, there may be some contracts that you have or commercial work that you have where the customer isn't paying you at the beginning. The customer could be paying you after 30 days. You need to keep a track on what invoices you've sent out. It also lets you monitor outstanding debt. That could be money that you owe, or that could be money that is owed to you. It's keeping a log of that. Lets you know which purchase invoices have been paid. What they are, a purchase invoice, when you've bought something and somebody's giving you an invoice, you want to check, have I paid it? Have I paid it again? Again, it's keeping track of those systems. And that's what it does. It reduces the risk of paying those invoices twice. I've seen it sometimes where somebody's paid an invoice twice. It's really difficult getting the money back from the customer. It really is. And then also provides the details to produce a cash flow. Cash flow is something that your business advisor will be working with you to develop, to run side by side with your business plan. And then it assists in costing and pricing decisions for you and your business. So first of all, the system is needed for you. External reasons. Who else needs to see your books apart from yourself? First of all, as a sole trader or even as a limited company, HM Revenue and Customs require you to keep accurate records. What they mean by accurate records is that it's a true record. You have declared all your income, and it makes sense to declare all your allowable expenses as well. But the records need to be in a way that they can understand. If the tax office do not understand your bookkeeping system because they're questioning it, they will assume what your business has earned, and they will assume what tax you pay. More often than not, they will assume a higher figure. So that's why you need to keep accurate records that other people can understand. There's no point having a really complex bookkeeping system. Nobody understands it. They're not going to know how much you've earned. So it is important you keep those accurate records. If you're a limited company, you will then need to provide your accounts to Companies House. Those of you who are sole traders or in a partnership will be required to complete a self-assessment form. We've touched previously on self-assessment forms, and many people do need to complete one. But your self-assessment form will have information from your bookkeeping. So if your books are correct, the information going into your self-assessment form will be correct as well. If you're lucky enough to pay VAT, so if your business generates more than £85,000 a year, which we all hope you will get there, you will then have to complete VAT returns. So again, it is important that you have your systems in place. There are occasions when some business will need to voluntarily register for VAT. Again, if you're unsure about that, speak to your business advisor. If you're employing staff, you'll have PAYE or pay as you earn. So when you've been in a job, you get a pay packet and you look at it and go, tax has been taken out, national insurance has been taken out. It is a record of how much that individual has been paid. So you as a company know how much you paid them, how much you've taken off for tax, national insurance, and how much as an employer you've paid for national insurance as well. You may be, at some point in the future, may want to look at a business loan. You may want to look at a mortgage for yourself at some point. You might be in a rented property at the moment, and you may have a plan in 2-3 years' time that you want to buy your own home. So if you're going for a mortgage, which you can do as a sole trader, as a self-employed person, but you need to have effective records in place. Be aware that if you're applying for a mortgage, yes, the bank will want to see your bookkeeping records. They will probably also want to see your self-assessment return as well. So that's why it's important that your self-assessment tax return is the same as your bookkeeping records. There could be legal compliance, so you may work within certain industries where a requirement is you have to complete a bookkeeping accounts for the people who will require that. So for example, if you're a charity or you're a social enterprise and you receive some grant funding, one of the requirements of the grant fund may be an end of year accounts that they would need that to prove where that grant money has been spent. Talked before about terminology, and yes, there is a lot of terminology. I don't really like too much terminology. I'm the kind of person that likes to keep things more simple. So when people come across all the financial terminologies, they see all these words, all these sayings, and it's so easy to think, what on earth does all of that mean? This is just some example of some of the terminology that is out there. Bear in mind, a lot of this probably will not apply to you. The most important ones on this list that will apply to you, whether you're a sole trader or whether you're a limited company, top left, it says turnover. Turnover is your total sales that your customers have paid you before any money's come out. So if your customers have paid you £25,000 in the year, that's your turnover. And it's important to have that as a figure. Cost of sales is what it says. It's probably better to explain that if you're making something. So I may be working with an artist who's creating a picture. They could be drawing, painting a picture. The cost of them producing that will come from the canvas, the paints, everything else. It's cost them £5 to make that. That's been their cost of sale. Also, your cost of sale will include overheads and general overheads for your business, which again, working things out like that, you will work with your business advisor to finalize that. Looking at your profits, your gross and your nets, obviously your profit is what your taxable income is going to be based on. So other things like capital expenditure, that's more like you buy a laptop. That's a capital equipment. Capital is usually items that you are buying. Capital expenditure is not necessarily marketing materials. And because you've bought a piece of equipment, it will depreciate. Well, what that means is it will lose its value. So if you bought a laptop for £500, for example, and you may say, well, I'm going to keep that for 5 years. So in effect, every year its value will decrease by £100. So after the first year, it's worth 400. After 2 years, it's worth 3. Until the end of the 5 years, it's worth nothing, and you replace it. Other things, capital allowances, accounting period, invoices, hands out. I would normally go through those specifically with people on a one-to-one if it's required. On the right-hand side, at the top, you've got receipt. That's basically everything that you've paid for. You've given a receipt, or you bought something, you've got a receipt. Receipts are important to keep because receipts are an evidence that you've paid for a product or a service. So when you're doing your tax return form, you have what are known as allowable expenses that reduces your tax liability. If you're just putting a load of figures in there, you've got to provide the evidence of that. So if you spend £8,000 on equipment and you don't have receipts, it's going to look very dubious, because how can you prove, well, I'll show you the picture of what I bought? No, you need to have the receipt. Drawings more apply to somebody who's a sole trader or in a partnership. When you're in a partnership or when you are a sole trader, you don't pay yourself a wage, you don't pay yourself a salary, you draw money from the business, and that's why it's called drawings. The dividends, and this is the final one, I'll probably touch on this, the dividends apply to limited companies. So I don't want to go into too much detail because it's easy to give too much information and to lead to confusion. But essentially, a dividend as a limited company, a dividend is a payment from the profit of the business. So a limited company, it's had a turnover, total income of £30,000. It's had expenses of £20,000. So therefore, the profit is £10,000. Once the corporation tax has been paid, after that, a dividend can then be paid. To be honest, a dividend payment is a more tax efficient method of paying yourself more money. Most people will start as a sole trader, but you might want to consider becoming a limited company at some point in the future for various reasons. Again, work with your business advisor to identify what is best for you as a business and what legal status is best for you. So all the other things on that right hand side, your ledger, it's your book. Your ledger is your account book. Your debtors and creditors are people who owe you money and people that you owe money to. Credit control is just controlling your money and controlling where it's going. Inventory is more if you've got stock. Physical stock check is you have a shop and you've got 100 tins of beans, you're physically counting the tins of beans. And then your terms and conditions of sale. That's I sell you a product. The terms and conditions are you pay me straight away. I give you the product, you give me the money. Sales and conditions and terms and conditions could be I give you this product, give you this service, you've got to pay me within 30 days. Okay, that's all that is. There's a lot more terminology. However, what I do say to people, there's some things you don't need to know, because if it's never going to apply to you, what's the point? So what is important, that where your business is at, you understand all the terminology that applies to you at that moment in time. Otherwise, it's an information overload. I've done it myself. When I look at something, go, that's a lot of information to take in. So it's about breaking it down in bite-sized chunks. It's nothing to do with intelligence at all. It's whenever you look at something new with terminology, it's so easy to become confused with so much information and terminology coming through. So it's using your financial information and using it throughout the year to record your financial transactions and looking at those figures to work out what profit or loss you're making. When you are making a profit, it's then being aware of how much your tax bill could potentially be, how much your national insurance payments are potentially going to be. The difference now with your national insurance payments, you used to pay monthly, you don't. National insurance payments are paid at the end of the tax year through a self-assessment form. So therefore, you have to be disciplined enough when you're making a profit and putting the money away. So at the end of the accounting year, you will report on your profit and need to understand the contributions of those calculations. Quite simply, you have your profit equals sales minus your allowable expenses. Remember what I said before, your sales is what was your turnover? Well, the turnover was £30,000. My allowable expenses was £20,000. Therefore, my profit is £10,000. They are the three figures. So your turnover, total sales, total expenses, and then profit. They're the three things you only really need to understand and know. When it comes down to the end of the tax year, you might want to ask or inquire, what do you think your tax and national insurance bill will be? Working with your business advisor, and I know I use our name quite a lot, but it is important for the simple reason we are there to help, advise and guide you. As a business advisor myself, there are some things that I might not know the knowledge of. So there could be something specific to your industry. I won't have a knowledge of that. My knowledge comes from a general overview on the mechanics of business. The mechanics of running a business are the same for everyone. So you're going to be looking at your turnover. You're going to be looking at your expenses. You're going to be looking at your profit. You're going to work out as a sole trader what your national insurance and tax will be, the same as a limited company. We can help with that. So as a sole trader, or if you're in a partnership, there's two kinds of national insurance stamp. Class 2 and Class 4. You can see on the screen that your Class 2 is £3.05 a week. It does change. Okay? It does change. But that's of profit of over £6,475. So if your profit, remember, after all your expenses, you've got £4,000 profit, you're not liable for national insurance stamp. You may make a voluntary contribution, but we will talk about that. As you make more profit from the business, so when you go over the £9,500, you then Class 4 stamp applies. Your tax, you will have a tax code. Most people's tax code means they can earn £12,500 tax-free before they pay any tax. So using that example of somebody's turnover being 30,000, they've spent out £20,000 on expenses, they've got £10,000 left profit. That will be liable to national insurance stamp because you've gone over the limit. But you've not used all your tax code. So on a £10,000 profit, providing there's no other sources of income that you've got, if that's your sole source of income, you will not be paying tax on that amount. When your business does start to make a profit and you go above 12,500, that's where your 20% tax will apply. If you're fortunate enough to be earning more than 50,000, it's 40%, and 150,000, 45%. £150,000 a year profit, you probably won't need me as a business advisor then. But that's where we want to get you to. Now, if you're a limited company, it's slightly different. With a limited company, the main difference is your tax allowance for you as an individual, £12,500, does not apply to the corporation tax and the business profit. That applies to you as an individual or you as a sole trader. So a limited company, it's made £30,000, £20,000 of expenses, whatever's left, 19% of that £10,000 is profit. The difference, being a limited company, if you've paid yourself a salary, remember we talked about PAYE before, PAYE and a wage, that is a wage, it's not drawings when you're a limited company, that is an allowable expense. So if you've paid yourself £10,000 in the year, that is an allowable expense for a limited company. National insurance does apply on the salary, on the wage that you pay yourself, but it's Class 1 stamp. And again, if you're fortunate enough that your limited company is making a profit, well then you could then pay yourself a dividend payment. You can see that straight away with a dividend payment, you don't pay national insurance stamp on the dividend payment, so there's a saving there straight away. The first £2,000 is tax-free as well. Then depending on how much you paid yourself or whether you're a lower or higher rate taxpayer will determine how much tax. But again, you look at that tax percentage in a dividend, it's a lot less than your tax as a sole trader. And these are the kind of things that you need to look at the legal status of your business. I normally say to people, don't just set up a limited company right at the beginning because you think you're going to save tax. No, most people start off as a sole trader and they may develop or evolve into a limited company if it's applicable to them. Again, talk about it. It's making sure that you have the correct information so you can make an informed choice for yourself. So we're going to touch on actual bookkeeping now and what kind of bookkeeping system to use. It's 3 simple steps to your bookkeeping. 1, keeping your receipts or other acceptable records. It could be you bought something online and you've had an email receipt. That email is still a receipt. The fact that it's not a physical one doesn't matter. You could print it out, then you have a physical receipt. Summarize your income and expenditure. So all your money in and all your money out. Some people might do that daily. Some people may do that weekly or monthly. It doesn't matter because it depends on when you want that record for. And then you use that summary to create a financial report that gives you specific information about your business. So the big one is at the end of the year, somebody said, that was my total income, that was my total expenditure, this is my total profit. That's all a financial report is. Again, for you as a business, the more simple it is and the more basic it is, the better, because everybody understands it. So moving on, how can the records be kept? There isn't any right or wrong way, and each has advantages and disadvantages. Just get all these up. So you could either A, put it in the book, and what I say to people, just literally buy an A4 book, and we can put the columns in, and you physically write your information in. That's a manual accounts book. For most people, I would recommend not buying an accounts book. Chances are you will never need to use everything that's in there. You've got ones out there that are called SimplexD and others. I'm not saying they're bad, but they might not be applicable to you as a business. So there's no point buying an accounts book when you're not going to use most of it. Doing it this way, you can adapt that to how you want it to be. Your money in, your money out, and you're recording it. That is it. The other way is on a computer. Spreadsheets, Excel is the one most often used, and you can use Excel on a Mac, or you can use the Mac equivalent of the Excel as well. The Excel system that I put together for people is exactly the same as what the manual one would be. Money in, money out, and keeping a record. The advantage of the Excel, you can put in formulas and it adds it up for you. Brilliant. But you've still got to put that information in. A bookkeeping is only as effective of you. If you're not effective, if you're not keeping records on a regular basis, your bookkeeping system will not work. The final one are things like accounts packages, could be QuickBooks, Sage, or get them on your phone now, or you can get an app. All those apps will do is taking a photograph of your receipts, it will add it all up for you, and it will do something similar and keep a track record of your money in and your money out. Some of them you've probably seen on the advert. It helps you send your tax return form in, your self-assessment form. It doesn't actually send it in for you. What it does, it will check for the most common errors, but be aware it doesn't check for all errors. It's not designed that way, but it checks for the most common errors that people will do in a self-assessment form. So there's no right or wrong way, there's no right or wrong system, it's what is best for you. Some people get very OCD over it. They have a manual one, they keep it on a laptop and they keep it on a hard disk. You can do too much, you really, really can. Me personally, what I say to people, some people like to write something down because they don't really like computers. Some people go, I really like it on a spreadsheet. It's whatever is best for you. Whatever system you use, it is important that you understand that system. If you don't understand the system, don't use it. Just don't use it. Now, the final one that people can do that isn't on here, they may use a bookkeeper or an accountant. Now, remember, a bookkeeper will record your transactions, the accountant will check it at the end of the year. That bookkeeper or accountant will use a system anyway. That could be manual, that could be a computer, that they will let you know what their system is. So even if you use them, you will still be using a system anyway. What I do advise to people, if you use an accountant or you use a bookkeeper, is that you still need to understand where your money is and the transactions of your money. They will be doing things for you, but you still need to understand where your money is and what you've got. You don't want to lose any kind of control. So what kind of records need to be kept? Again, this is terminology, so some things on here will not apply to you. Again, work with us and we'll identify which works best for you. There's a list here, but before we go through the list, most of you will probably be dealing in cash. So all your system will be either a book, an Excel, and a bank account. That's it. You may want to keep a receipt book. So if customers are asking for receipts, that's where you can buy those duplicate books to give a receipt for somebody. You're keeping all the receipts for when you've bought something as well. That's it. If you are giving out invoices to somebody, that's where your sales invoice comes in. So you've done a sale, you create a folder, you've given an invoice out, you need a file with all your invoices in. But more importantly, which ones haven't been paid, so you can chase those because that is your money that you should be getting. If you've purchased something from a company and they give you 30 days to pay, that's your purchase invoice file. So you can check, right, which ones haven't I paid? Oh, crikey, I haven't paid them. I'm getting a demanding letter from them. That's what you need to do. Petty cash doesn't really apply to a lot of people. What the petty cash is, I'll give you a good example. You've got an office or you're working in an office somewhere and they say, oh, we need some milk in, get some money out of petty cash. Petty cash is just a small bookkeeping system that keeps an eye on a small amount of cash that you might need to dip into. Put a pint of milk for the office as an example. By all means, keep all your bank records and keep all your statements. So much is online now and you can get access to your books, access to your records and statements. It's easy to do. Use something there which is known as a taxation file. Again, terminology, don't worry too much about that. If you're doing a lot of mileage in your business, you could be a mobile hairdresser, a mobile beauty therapist, a gardener. You're going to people's houses and you're using your own vehicle for business use. So you need to keep a log of your mileage. What I would do in that situation, you will have a log of where your customers have gone, which is usually in your phone or in a diary. When you go to see that customer, put the mileage in on the same day. So it means that your diary helps with your bookkeeping system, so you know how much mileage you've done. 45 pence a mile, you can make that as an allowable expense as well. Your cash book, that's all your cash book, which shows your income and expenditure, or your Excel spreadsheet. That's all that is. Keep all your files, keep them updated, and keep them for 6 years. Personally, I'd keep it for 7. But yeah, you're going to need to keep them for 6. At the end of your tax year, put your accounts book, all your receipts that you've added up, put it in a file, put it in a box, and store it somewhere safe. That's it. And then you start afresh with a new year, new accounts book, new receipts. So every year is completely kept separate for you. It makes it easier. What I don't want is if you ever get asked or you need to provide evidence on your self-assessment form on a particular year, you can go straight to that file and go, right, here's everything. So if you've declared everything, you've written everything down, you've done all your expenses, it's all there, and it's the same as your self-assessment form, you've got nothing to worry about. At the end of the day, if you keep a record of everything and keep on top of it, you will sleep at night. Even if you've never done books before, we'll help you put your systems together that works for you. So a summary of bookkeeping, it's got to be simple. As I said before, you've got to keep it simple and require and use as few books as possible, and it shouldn't be time consuming. If you're spending 10 hours a week, you're either A, earning a lot of money and you've got a lot of transactions, it shouldn't take you any more than an hour a week to do your books. I've said previously on a different presentation, and I say to a lot of my clients, diarize a bit of time for yourself every week. So it could be 10 o'clock on a Monday morning, that's when you do your bookkeeping and all your paperwork. You don't book anything else in. It's the same every single week. It's a pain at first, but the most important thing that you've got to do, as well as having a good bookkeeping system, is to manage your time effectively. And by managing that time, it's to set aside an amount of time to look at your bookkeeping and keep on top of it. There's no point saying, oh, I'll do it sometime next week, because you won't have the time. And then 10 months have gone by and you're thinking, oh, I've got to do my tax return form and I've not written anything down. And you're ringing me at 6 o'clock on the 31st of January. I can't help you. What we can help you with is to set up a system that works for you, that you can manage on a weekly basis. And it becomes part of the norm then. It becomes part of your routine that you do your books every week. You do that. So it's got to be ease of access to information. It's got to satisfy HM revenue and customs. They want to look at it and go, right, what's your turnover, total sales? What's your total expenses? What's left? That's what they want to know. They might want to check all these expenses. Is it really an expense? Or have you gone out for a meal with your partner and you've just put that on as an expense? They could potentially check things like that. What I would say to you, if you keep a record of everything, you've put everything down honest and truthfully, you've got nothing to worry about. And if for some reason you ever get investigated, don't worry, because you've got nothing to hide. If you have nothing to hide, you say, the world and its mate can look at my accounts. I don't care, because I have nothing to hide. So at the end of the day, it's about providing the information that you need for your business. So from this information, this is a bit more terminology, you will produce or could produce a profit and loss account and a balance sheet. And I'll touch on what they are. So first of all, a profit and loss. What is it? A profit and loss tells how the business has performed during a period of time. Most people will use a profit and loss account for the year's trading. So as a sole trader, your tax year ends the 5th of April and starts on the 6th of April. So if you started your business on the 1st of October, you've only got a couple of months up until the 5th of April. Your first tax year has ended. You will want to do a profit and loss for that period of time. It covers every aspect of financial performance. So it's all your income, all your allowable expenses. Remember, the profit is the difference between total sales and total costs. It is a really good management tool. And what I mean by that, it shows you in your first year you've made £6,000 profit. Okay. When you do your profit and loss for the second year, you've made £15,000 profit, even better. Then you can see how the business is growing as well. It shows clearly what the business has earned and what profit has earned. And it's a useful guide for a ready reckoner with HMRC. What we mean by a ready reckoner, it gives you a good indication of what any tax and national insurance liability will be. So if you've looked at a profit and loss and you go, I've made this much profit, well, I know my national insurance is going to be this and my tax is going to be that. So before I give myself money, that's what my tax and national insurance will be. I just want to touch, one of the things that it was saying before was about a balance sheet. Again, very few businesses, certainly sole traders, will be using a balance sheet. All you've got to remember, a balance sheet is a snapshot. It's like a photograph. So it's a photograph of the business at that moment in time. What it means is, if you take a look at a balance sheet for your business, it could be, I want to look at my balance sheet on the 1st of November. So it'll say, right, how much money have you got in the bank? How much debt do you owe? How much are you owed? And what money have you got left? That's your balance sheet. It's a snapshot in a moment in time. If you do need to produce a balance sheet, let us know. We'll easily help you put one together. More often than not, a lot of sole traders generally don't need a balance sheet. But if you do, no problem whatsoever. So about your bookkeeping, cash flow and budgeting is obviously very, very important. Well-kept and up-to-date records provide a detailed resource. where you can produce monthly, quarterly or annual figures. Remember, all those figures will be your total sales to that point, total expenses and your profit. That's all the cash flow and that budgeting will be. So it lets you estimate your tax and national insurance liabilities throughout the year. You don't want a nasty surprise and a big bill. What's the point of getting your tax bill in and you've spent it and you go, they're not bothered. They want their tax, they want their national insurance. Whether it means you then going out to get a loan, which is a debt for the business, to pay your tax and national insurance. So it's about budgeting beforehand. Remember, there could well be historical peaks and troughs. So a lot of businesses that I help, January is a bit of a dip. January is a bit of a dip for a lot of businesses. Whether you work in the construction industry, whether you work in other industries, it's a bit of a downer during January. Businesses that are working gardening and outside, again, there will be peaks and troughs that you should naturally know what they are. Even if you're working in personal services, you know, you're doing hair and beauty, you're doing tattoos or anything, sometimes there will be peaks and troughs with them, and it's identifying when they are. Do not be seduced by a sudden cash surplus. When you're in a job, it's a lot easier because you know what you're going to get every single month, unless you do overtime. But generally, your PAYE, your payroll, your wage packet will be the same every month when you're in a job. When you're self-employed, it will fluctuate. It will go up and it will go down. It's lovely when it goes up, but don't fall into the trap of when it goes up, you just spend more money. And get used to that money being up there, because the following month when it drops again, it's horrible to have to tighten your belt, especially when you've promised things to do something with family, for example, and then, oh, I've not earned enough money this month, we can't do it now. So that's where you get used to your peaks and your troughs within the business. It's important to do that. Just want to touch very briefly on a timeline for self-assessment. This is for sole traders and for partnerships. This isn't for limited companies. As I mentioned previously, the tax year starts on the 6th of April. So we're in a tax year now, which started the 6th of April. During this tax year, your business will launch. So your first tax year may not be a full year because the last day of the tax year is the 5th of April. So if you've traded for 3 months, your first tax return form shows you trading for 3 months. And then again, the 6th of April is a new tax year starts. So when the 5th of April is gone, within April, providing you've registered with the tax office, you will get a letter from them requesting a tax return must be completed. I normally say to people, do your tax return as soon as possible, because your deadline is the 31st of January, and that's your deadline for the submission of your tax return and also payment as well. So the tax year ends on the 5th of April. You have until the 31st of January the following year to pay your tax and national insurance. So there's plenty of time for you there as well. So there's no reason for you to miss your deadline. In subsequent years, the payment is on account. So for your following years of trading, your payment is in January and in July. You will basically do an upfront payment in the future. And that is something that you need to be aware of. So as an example, if in the first tax year, your tax and national insurance bill is £1,000, yeah, you will have £1,000 potentially to pay in January. Be aware that when it comes to April and the following January, you will have payments to make. It's the July payment where a lot of people get stuck with. So you need to do those balancing payments. If you're the kind of person who cannot put the money away, what I would suggest, you can set up a payment scheme with HMRC, where you set up a monthly payment for your tax and national insurance. So say, sake of argument, you're putting away £200 a month because you expect your tax bill to be over £2,000. So if you've got it over a 12-month period, you'd have paid £2,400. You complete your tax return form and your tax and national insurance bill is only £2,000. You will be reimbursed that £400. Or if the year's gone even better than you expected and your tax and national insurance bill is £3,000, well, you've already given £2,400, your remaining balance is £600. Again, it's working what's best for you. I do like monthly payments because it's better with your business, it's better with your cash flow that the money's set aside. Because remember, when you're in a job, the tax and national insurance is already taken off. When you're self-employed, you have to set it aside. So it's a bit more difficult for some people. It's doing what is best for you. So every business needs to minimize its risk. So you've got to prepare for those peaks and troughs in your business. Realistic forecasting is vital. Do not always assume growth. When I'm working with people, they will turn around and go, Chris, I don't know how much I'm going to earn. I haven't a clue. We have to come up with some kind of forecast, because if you have not a clue whatsoever about your business and its financial generation of money, is it right that you go into business? It's about you making an educated guess. It has to be. You've got to have an idea. Best way to start is you look at how much do you need to earn from the business in order for you to survive. That's it. That's your personal survival budget, which is part of your business plan. If you can't do or feel that your business cannot pay your personal survival budget, you've got to look at whether your business is viable. If my business would never get my personal survival budget, I'd need to go back to the planning stage and look at my business so it could be potentially viable. Obviously, think about how the economic climate will affect your business. Who'd have thought in regards to COVID-19, who planned for that? Nobody really. And that is an extreme thing of what is happening. But at this moment in time, and for the foreseeable future, that is a part of our lives, and that will affect your business, and you need to budget and plan accordingly. So maybe your business idea has to change to take into account things like COVID-19. So it's keeping a clear perspective on how your business is developing. In a period of rapid growth, look hard at the reasons why. Are there good practices to replicate? You tend to find when a business starts, you might have friends, family in your network. So you have a peak to begin with. Oh, I've got loads of customers. Once your network and friends and family have bought from you, it's then relying on brand new customers. So it's quite common to have a trough after that. And it can be a bit disheartening. So just be aware of that. Don't let a good 6 months unduly influence your forecast. We always go on about peaks and troughs. We go on about seasonality with a business. I like to be more cautious. So when I'm helping somebody with forecasting for the business, we look at worst case scenario. We perhaps might overestimate your expenses, or we might underestimate your income to create a natural buffer. And if your business works in a worst case scenario, well, that's a good base to start from. It really is. You have to cover downtime. I know a lot of people who are self-employed, they go, I haven't had a holiday for 3 years. You need a work-life balance. I've had many people who not necessarily had a mental breakdown, but they've covered stress and anxiety caused by the business because they're spending too long on their business. A lot of people have family, have friends and a network. You need to still keep that. You need to have time for you. You need to have downtime within your business. Yes, you're passionate. Yes, you love your business. But some of you may have a family who also need you as well. And that work-life balance is so important, and it's so easy to forget that. It's about your well-being. It's about the well-being of the people around you as well. Don't get me wrong, it's lovely to earn money from a business, but if your health isn't there, you're not going to enjoy it. So in the business plan, you're estimating future sales and costs, but good record keeping can help you to see if things change and whether you need to change practices, invest more, promote more. It's a really good way of giving the guidance and a focus for the business. So we're looking at cash flow. Now, I don't like to use the term failure, but they say bad cash management is the main business reason for businesses not succeeding. Flow of cash. How many times you see it on the news, you think, I thought they were a really good shop. They might be a good shop, but if they didn't have a good cash flow, it's not working. It's just throwing money away. So it's working out when you're going to have those dips in cash. Sometimes you don't know. However, you need to be prepared for the worst. So if your business has a downtime and you're not going to earn any income in that business for 6 weeks because of seasonality, or you work in schools and you're thinking, don't earn a penny during the summer months, I might do summer schools, but you might not. So it's looking at making sure the business has enough cash to cover you for that time. Perfect example, the gardeners that I've helped, people who are landscape gardeners, doing whatever. They will have their peak time as the growing season of the grass and the plants. So when it comes to November, might be okay, but certainly December and January, those 2 months, maybe 3 months where the business income will drop. Yes, they will look at different things to do, but during the summer months, I would expect a peak and earning enough money that can then cover you for your winter months. And it's the same for any other business as well. So it's find out when you might need extra cash, where you're going to get it from. Is it something that you've already saved, or do you need to look at loans, or do you need to look at an overdraft as well? Remember, the cash flow includes your own salary or drawings if you're a sole trader, taxes and any loan repayments you could have. So what we're going to look at for a cash flow, yes, it's your turnover, but the expenditure is everything that is going out. Remember, we talked in the past about your turnover, allowable expenses is profit, and that's what you pay yourself from. Under your cash flow, it's still the same turnover, but your expenses will include your drawings, will include your potential tax and national insurance. Is there enough in there to pay for all of that? And that's your cash flow. Again, don't let your customers get too far in debt. You will not be able to pay your bills. So it is important to have your invoicing. If you're cash, invoicing will not apply to you. So if you've done some work for a customer and you say, right, you've got to pay me within 30 days, that's your invoice. You need to invoice as soon as you finish that job, you need to give the invoice straight away. If you take 2 weeks to give an invoice and the invoice says, pay me within 30 days, it's 6 weeks before you get any money. You state your payment terms on your invoice. So your payment terms say payment is due within 30 days of the date of this invoice. So if the date's the 1st of November, they've got to pay by the 30th of November. A lot of companies will pay as late as possible because they're looking at their own cash flow. Send a reminder by phone or email if payment terms are not met. Sometimes it can be an embarrassing thing. Some people do not like chasing money. However, this is your business. You need to chase money. If things are going bad and somebody is not paying you, you could consider sending a solicitor's letter. A solicitor's letter isn't a legal document, it's an instruction. However, a lot of people, if they receive a solicitor's letter, will panic thinking, well, I better pay this now. Think of it from a company's point of view and their cash flow. They cannot afford to pay all their invoices in that particular month. So who are they going to pay first? They're going to pay the ones who are shouting the most usually. They're going to pay the ones who are threatening legal action. The ones who, well, they haven't even chased us, back of the pile. So you must chase your invoices. Final course of action is a small claims court. Something to consider that you are entitled to do. I've even had occasion on some of my clients, I've gone through a small claims court, even though the fee for the small claims court is higher than the debt. It's the principles behind it. So you're sending a message out there, if you don't pay me, I'm taking you to court. There's something on the news a couple of years ago down south, and it was a building firm, it was a family firm that had done some work on a large bank. Can't mention the bank for obvious reasons. However, the bank refused to pay. So the family firm went through the small claims court. Now, I think they were owed about £6,000, which was definitely worth their while. I remember seeing it on television. Bailiffs turning up at this local branch where they'd done the work. The bank manager saying, you can't do anything. The bailiff says, we have legal documentation where we're coming in and we're seizing assets to the value of £6,000. You can't because of data protection doesn't stop. We're coming in to seize assets. The family firm were paid within 20 minutes. It's paid. So it goes to show, just because it's a big company who owe you money, don't think that they can boss you around. You need to chase that invoice because it's cash is king for you. It really, really is. It's important to remember that a sale is not a sale until you've got that cash in the bank or in your hand. Otherwise, it's just a piece of paper. It's business. You need that money coming in for your business. Final thing we're going to touch on this is sort of looking at how you price your product or your service. A lot of people say, I don't know what to charge. What I would say, first of all, do not undervalue yourself. The cheapest isn't always the best. By all means, be affordable, but don't be the cheapest. So how do you work out how much to charge for something? A couple of simple things to do. We have quite a lot of things here, like your customers' perceived value, your labor or your time, is there a gap in the market, the uniqueness, customer profile, materials, profit margin, competitors' prices. There's lots of things to look at. Taking it down to its basics. First of all, how much does it cost you to sell that product or sell that service? So if you have a product that you are selling and it costs you £5 to make that product, that is part of your cost. £5 is there. Then, how long are you taking on that product? So if something's cost you £5 to make, it takes you 2 hours, and you're charging £10 for the product, you are working for £2.50 an hour. I wouldn't work for £2.50 an hour. So why should you work for less than minimum wage within your business? So you have a value for your time. Some people say, yeah, I'll do that for 50 quid. And you're in somebody's house all day for 50 quid. It's not worth it because your time isn't worth it. And if you continue at that kind of low price, you'll find that you're not managing your money. Your business isn't earning enough money to cover your personal survival costs at home. So you don't have enough money for your rent or your mortgage. You don't have enough money for food, gas, electric. You're not going to carry on with the business because it doesn't become viable. I agree, it's about not going to the other extreme and charging a ridiculous price. I know some people say, they look at the target customer and they say, if I know it's a wealthy customer, I'll charge more. No, you have to be consistent because people do talk together. And why, just because somebody's worked hard and I have more money than somebody else, why should they have to pay more for something than somebody else when it's the same product or service? You offer good value for money. You offer something that is affordable to the customer, but they are paying for what they need. So you've got to think of, if you were offered a job, would you take a job for £2.50 an hour? The chances are you wouldn't. So don't work for yourself for that small amount of money. Be careful of mates rates, family rates. Before you know it, all your customers are friends and family, and you're doing it at a family rate. And again, you don't earn enough money. It's about a business. This is you earning money. It's not about being greedy. It's about being realistic, having something that is achievable for you within your business. It does sadden me sometimes when I see some people and they charge a really low price and I go, you're undervaluing yourself. You're belittling yourself because you're basically saying, I'm not worth much. You are. Easy thing to do. Look at what your competition is charging. Everyone will usually have competition of some kind, whether it's direct competition or indirect. You look at what they are charging. You want to be competitive with them, but you might have something that is unique for what you do that they don't do. That's why you're a little bit more. Not everybody will be your customer. Some customers will go, not paying that. They're not your customers. I wouldn't go out and plead for sales to somebody and then, oh, you can have it for this much. They then tell their friends, well, if you speak to them, you moan a bit and say, I'm not paying that, they reduce the price for you. And then before you know it, again, you're not earning enough money from the business. So that's basically it about the bookkeeping. This part of it has ended now. You could pause now before we go on to the next bit, and I can have a slug of water. And then pause it and come back, and we're going into sales and marketing. Sales and marketing is a difficult part of the business for a lot of people. A lot of people do not like selling. I hold my hands up. I am out of my comfort zone if I am selling something. If I had to knock on somebody's door, if I had to pick up the phone and ring and sell them something, I'm out of my comfort zone. So I don't do that. I'm not there to sell things to people because it's not something I'm comfortable with. That doesn't mean I can't do it, but it's something that I do not like doing. So for yourself as a business, it's developing an effective marketing strategy that works for you. So during this session, we're going to look at what is marketing, what's effective marketing, looking at a marketing plan, and the difference between marketing and sales. And we're going to touch on branding as well. So every business does need to market. Every business needs to promote itself in one form or another. So what is marketing? These are some quotes from various people. Marketing is telling a story about your volume that resonates enough with people that they want to give you their money. That's from Seth Godin. Marketing is the management process for identifying, anticipating, and satisfying customer requirements profitably. Remember, we talked before about bookkeeping and about profit from the business. So see your business as a story. It's about your values. It's about providing something to a customer that they get value for money, they get something that's affordable, you make a profit, everybody's happy. There's a thing called a marketing mix about developing a marketing plan. Some people do really get bogged down with doing too much marketing and they're not running the business. It's getting that balance right for you. So it's looking at essentially, who are your customers? Where are they? What do they look for in a product or a service that is similar to yours? Where does your product or service sit in the market? What need does it meet? Are you a budget service? Are you a higher quality service or premium? Are you quality focused? Where and how should you promote to your customers? How the competition doing? Are they doing well? Could it be done better? What is your budget for marketing? And how often do you need to do it? And what are the ongoing costs? Every single business, a small one to a huge business, has to do marketing. They do advertising, they do promotions, word of mouth. There's various ways and methods of promoting your business. Some will be more effective for you rather than others, and it's identifying which ones work for you. But you can only do that once you've got you as a business. So what is a brand? Is a logo a brand? If you look at many customers and businesses' names, they have a simple name. Some of these names on here are family names. They are. Certainly some of the Japanese companies come from Japanese families. But if you look at most of them, apart from Starbucks coffee, if you did not know what this business was, if you did not know what Stella Artois was, or if you did not know what Dolce & Gabbana is or Toshiba, if you didn't know about them and you saw them for the first time, you wouldn't have a clue what they're selling. So that's about effective branding. The brand itself, you become that brand. The brand evolves over time, so people recognize that brand for the product. So straight away you can look at these. Most of these you will know what they do. Some of these you go, not really heard of them. But for most of those companies and businesses, the brand becomes itself. And it's very effective in what they do. So what is a brand? A brand, I believe, can generate feelings and thoughts. A brand is the quality, service, trust, cost, lifestyle, style itself. So brand is all of those. Somebody buys an item of clothing that is branded. They buy it because it has that logo on. Doesn't necessarily mean that the quality of it is better than somewhere else, but they bought a brand. The best one is cars. You know, somebody will not be seen wearing or driving a certain kind of car because it's not the right kind of brand for them in their business. Other people want a certain car because they want to promote a certain image about themselves, about how they are. So what is your brand? Your brand is built by your actions and the experiences you deliver to your customer or your potential customers. The brand is your promise, it's your commitment, it's your pledge, it's what you stand for, and it needs to be reflected across all your marketing and communications. Again, it's very similar to when I've talked previously about bookkeeping. It's about having something where the balance is right. You've branded your product. You are promoting your product in a way that isn't taking up all of your time, but is effective. So remember that the brand is you, it's what you represent. Choosing a name, first impressions do last. I like quirky names in businesses. I really, really do. They make me smile, but they also make me remember that business. So it's about, if you're thinking about a name, it's making it appropriate. Using a name, obviously check domains, company's house. Remember, as a sole trader, within reason, you can call yourself whatever you want, but it mustn't be misleading, cause confusion, or be offensive or restricted. And it should reflect your brand. As an adult, we think too much about a name. What does it mean? I want it to imply this. I want it to say this. Sometimes the best people for coming up with a name of a business are children. The reason why children have a more creative mind, they have a more open mind than most adults. Whereas as an adult, we think of a name and then we think too much about a name. Perfect example, I've got 3 children. Each child's name, I'm thinking, what are they going to be called at school? What will their nickname be? I'm thinking too much about it. And it's the same with the business. You have a name that means something to you. I believe at the end of the day, your customer base will not really be that concerned on what you are called, particularly if you're a sole trader, because they will be dealing with you. Even though your business will have a name, they will call your business by your name, by you, your first name. Oh, Sue's coming round, or oh yeah, Michael came round, did the garden, or you know, Emily fixed my car and it's brilliant. So they've not even used the name of the business because you are that business. So the name has to be important to you. You've probably all heard of Steve Jobs. He gave a quote to say, to me, marketing is about values. This is a very, very complicated world. It's a very noisy world. And we're not going to get the chance to get people to remember much about us. No company is. So we have to be really clear on what we want them to know about us. You get certain people in certain jobs who they make a change to that business. There are other computer firms out there, but again, we talk about branding and you look at the branding of Apple products, that it's well known they are perhaps overpriced. However, people are prepared to pay that because of the brand, because of what it is that they bought. It's the same with vehicles, it's the same with clothing. When it's branded, it is more expensive because you are buying that brand. He was quite a visionary as well. And there are other people out there who are just as good as he was. They may not be speaking as loudly, shall we say. So as a business, you need to find a gap and fill it. And I'll touch on what some of those are. We've got some examples here in comparisons of businesses. First one we're looking at is books. Amazon versus Waterstones. Amazon is online, and yes, I know Waterstones has an online account, they do. But for this example, we're looking at somebody buying a book through Amazon, where they're sitting at home, Anywhere, wherever they are, they've ordered a book. Comparison to somebody walking in a Waterstones, having the experience of going into a shop, leafing through the books, the smell of the books, the touch, the feel, the looking at them. Some people prefer to do that. Amazon, quick and easy to order, saves time and sometimes can save money. Waterstones might be a bit more expensive, but people are wanting the experience. You know what, I like to go to Waterstones, I'll spend an hour browsing the books. Me personally, I prefer to browse something physically rather than on a screen. So I'm the kind of person who I will go into a Waterstones, for example, I will look at the books, I will just have a nose, and I could use quite a bit of time doing that. I have ordered books from Amazon because sometimes it's quick and easy. I want that. I want it in 2 days' time. Can't be bothered getting in the car, going on the train, just order it. So those companies focus on place. Amazon, their place is online. Waterstones, as well as online, have a physical presence and a store for you to go in. They also have a coffee shop, so for people it's an experience. The likes of your Lidl, Aldi, pound shops, they're known for selling reasonable quality products at a very competitive price, and they focus on price. I don't know those of you who remember years ago there was a shop called Netto, and I can say that quality might not always be the best, but people were a bit ashamed if they were seen going into a Netto, for example. Now it's perfectly fine to go into Lidl, go into Aldi, go into the pound shop, and it's perfectly fine to go into somewhere like Primark. If you think about people who are very fashion conscious, they will buy brands, they will still happily go to Primark to buy certain products from there that will contribute or will go with their branded clothing that they are wearing. The likes of Primark did amazing, effective marketing over the years. They really, really have. That people go, yeah, I go to so-and-so, the boutique shops, and I'll nip to Primark and I'll happily walk around with my Primark bag. Several years ago, for those kinds of shops, certain individuals would not be seen dead going to those shops. Now, it's accepted. And it's interesting, the likes of Lidl and Aldi, the taste testing and the quality of their products has actually been higher than some of the other major supermarkets. So much so, they are trying to copy Aldi. So you've got Tesco, Asda, Morrison's. They are doing products and pricing similar to Lidl and Aldi because they realise how much custom they are losing. And customers now want more value for money and will shop around. So they found their gap, which is price, and filled it. Other companies will look at promotion. I don't know if you're like me. Have you watched an advert and you're thinking, what are they selling? And at the end, it's an advert for perfume or men's aftershave because it's very creative. So they're spending a lot of money on promotion. They want their product to be a certain image. You wear this product, this is what you become like. And they're creating almost like a fantasy for somebody if they wear this perfume. So they have, it could be billboards, internet magazines, the TV. Some of the adverts on television are sometimes better than the programs. Some of them are very artistic and creative, shall we say, but they're promoting certain products. So they've looked at the promotion of them and how they are, and it's quite effective. It really, really is. There's also sometimes where negative promotion has been done on purpose. So when I was younger and I used to buy my 7-inch singles, if the BBC banned a record, that was the first record I bought. I'd never heard it, but the fact that it was banned and I was like 15 years of age, I'm buying that. Might be absolute rubbish, which sometimes it was, but because of that promotion and marketing that works, that supposedly seen in a bad way, it's been banned, I'm going to buy it. It's the same, I don't know if you remember, there was a Sophie Dahl who's a model, Roald Dahl's granddaughter, and she's doing a lot of modeling a good few years ago. There was a billboard campaign of her promoting a perfume where she had no clothes on, couldn't see anything, but it was very suggestive and perhaps too suggestive that it was offensive. So the billboard was taken down. When it was known as being offensive and the billboard was taken down, the perfume that it was advertising rocketed through the roof, increased sales because the marketing and the campaign was banned, and therefore it worked effectively. I believe the company purposely did that. They wouldn't get away with it now because it does cause offence to people, and rightly so. But the whole point of it is how you do your promotion can be very, very clever sometimes. And there's companies out there that spend millions and in fact billions on promotion as well. The other one could be the actual product itself. So you've got the likes of Haagen-Dazs and Armani. They sell expensive, but in their eyes, higher quality products which they feel are worth the money. Now, don't get me wrong, there are certain products where the contents and the materials, they are using a higher quality vanilla ice cream, for example. They could say it's a higher quality cut of cloth for the Armani suits. However, from a personal point of view, some people will think, is it really worth that money? For some people it is, because I've got this product. I'm wearing this product, I'm eating this product because I'm trying to tell you I've got money. If you think that's what it's all about, isn't it? Where some people will wear a product, some people wear it because, no, I really actually like them. I love their products. I have a teenage daughter who's 15 years of age. The product is important, what she wears, because it has to have the right label. She's 15, that's what her friends wear. She feels in order to be accepted in her society, she has to wear certain products. Isn't that effective marketing? Whilst we might not agree with it, it does work and it is effective. So those companies are looking at the actual product of what they are selling, and that is what they are promoting, and that is what they are pushing. So for you, it's about doing your market research. Many people don't know what market research is. Is it worth it? Well, it's about helping you to develop your business effectively through the awareness of your marketplace and your competition. So it's knowing your customers and also know your competitors. I think competition is good, to be honest. It really is. Don't get me wrong, if you are the first person to design a product or a service that nobody else will or nobody else has at that moment in time, it will be copied. It's the best form of flattery. You have a business that is doing well, people will copy your business. You can't stop that happening. It may be if you have a specific product and you've protected that product, fair enough, but alternatives will come out, alternatives will be available as well. So it's knowing your customers and knowing your competition out there. Can you improve or can you do better than what your competition is doing? So it's looking at your market research. Before we look at all of this, think about what you know already. So I work with a lot of people who are setting up their business because they've been made redundant or they've left a job. They already know a lot of information about their customers, about their market. That is really good, effective market research already. And that, for some people, forms the majority of their market research. But then it's looking at other items or other things, such as the internet is an amazing thing. The internet can be a very scary thing at times about what the content is and what's out there, but the information that is available to anybody, it is incredible. It has made the world a smaller place. So your internet, which is competitor websites, you can look at a competitor and find out so much about them straight away. So you can do questionnaires to your customers, where they would search for the service, what are they prepared to pay, and the frequency of them using that service. As I said before, it's about your previous experience in an industry, which is important. It really is. Or do you have a partner in the business who again brings in something into the business? You got your formal market research, things called Cobweb, Keynote, trade associations and governing bodies, where they will produce statistics, for example, or information or demographics. So many people of a certain age live within this area. This is how many people are unemployed. This is the value of the average house in this area. There's a lot of information that you can utilize for your business. An important one is networking. Sometimes it's talking to competitors. You may meet somebody who's a competitor and you think, okay, we do have a bit of competition with each other. However, I'm really busy at the moment. I will recommend them. And hopefully it's returned. So then when that business gets busy, oh yeah, I know so and so. I can't do that at the moment, but they can. And that's getting your competition to work with you. Looking at potential partners and your customers as well. The press is important, magazines, newspapers, local publications, but again, you've got to look at the practicality and is it worthwhile? You putting an advert in a local paper? Give you an idea about local publications. Where I live, I will tend to look at the local press to find out who's passed away. Sounds terrible. That's what I'm using. I'm not looking at it for services or anything. I'm looking at it to see who I know who's died. That sounds terrible, but that's myself, a lot of my family members, that's what they will use that local publication for. Other people I know do trust that and go, oh, I want a local tradesperson. I'll look in my local magazine or look in my local publication. The bigger the circulation, the larger the price. So you've got your local publications. Then if you have something like, a paper that could be covering like the Liverpool Echo or the Manchester Evening News, they will cover a larger circulation. They will cost comparatively more. Then if you're looking at your national newspapers, again, that will be even more. Looking at things like local notice boards in shops, whether that's worthwhile as well. But then, seeing what's available on those notice boards, seeing what's available in the local publications about your competition, seeing what's out there. So it's looking at the analysis of your competitor. Who are they? Where are they? What do they offer? What do they charge? What marketing do they currently do? What have they done in the past but didn't work? What does their brand convey? How many times have you looked at a brand or at a logo and you're thinking, that's terrible? Why is it terrible? How could you improve on that? What are their strengths? What are their weaknesses? Why do people buy from them? So it's all about your competitor knowledge. Can you do better than them? Can you provide something that they are not? Can you provide an additional service? Can you be competitive in price in comparison to the product or service that you are delivering? So your competitor analysis is really, really important in your marketing. You may look at, for example, if you're setting up a cafe, you may look, I want my cafe to be on that street. You look at the street and there's a lot of cafes there already. So there could be a saturation because there's too many food outlets. Well, is it worthwhile you being there? Or should you go a mile away to somewhere else that's a different street that's got a market? Because don't forget, customers and markets move areas as well. You've only got to look at a lot of town centres that have now become like a ghost town because people go to retail outlets. They go somewhere else. They tend to not go as much to town centres anymore. Whereas 30 years ago, people would have gone to the town centre. So it's finding about where your market is moving to. So what is your perfect market? I don't want you, when you're putting together your business plan, when we say, right, who's your market, for you to say, oh, it's anyone. You can't do that. Yes, I understand certain businesses, anyone could buy from that business, but there's no thought put behind it. So is there a certain age group of customer that you're looking at? Are you looking at a certain economic group in certain areas, the location? What's the life cycle? Is somebody going to buy from you once and never again? Or do you think you're going to get repeat custom? What's their attitude towards credit or internet sales? Other lifestyle factors, interests? And are they other businesses as well? So it's looking at your perfect market. Are you selling to the general public or are you selling to businesses? So it's finding out about that information, which I probably think most of you will know already, but we need to get it all down on paper. So you're focused in your business and about how it wants to move forward for yourself. Looking at various marketing tools, and don't get me wrong, there are a lot of marketing tools out there. They are all good in one form or another. Where people do go wrong, they pay for a marketing tool that isn't applicable to their business. For example, some businesses are more online than others, but you might have a business where an online presence isn't the priority. So therefore, is it worthwhile spending a lot of money on that online website when your customer base don't go online? So would Yell.com or other those, would they be any good for you, or is it wasted money? Or you could have a business where, you know what, it's online, I need to be on Yell.com, I need to be on Thompson's, I need to be on those, on the trade sites, directories, because that's where my marketing is. Do you look at publications? There are sector-specific publications out there, trade journals, the Yellow Pages, newsletters, press coverages, community publications, church magazines, there's various. Some of them may be applicable to you. You look at your visual marketing. Do you have a van or a car? Does it have the signage on the side? If you're in somebody's home, working on the home or whatever, do you have an A board outside saying, working here, this is what I do? It's nice to have a logoed uniform. Remember we talked previously about branding, and your branding is across everything. So it's having that logo or a brand that looks nice, and it can go on t-shirts, it can go on the side of the van, it can go on your packaging, it goes everywhere. Your branding is a constant reminder of who and what you are. I do think branded uniforms look quite professional as well. But again, it depends on the nature of your business, whatever you are doing. Again, looking at your printed material, a lot of people like business cards, fine. But again, people don't use business cards effectively. One of the biggest mistakes people make with a business card is they put too much information on it. I'm not going to look at it. What I like to see on business cards, and I've seen a couple of my customers do this, particularly ones who are providing a service. So it could be like, I'll come and do your nails every 6 weeks, I'll come and mow your lawn, I'll come and do your hair every 4 weeks. So you have a business card, which is all your details on the front, and on the back is an appointment card saying, hi, thanks for coming today. I've put on the back of this card your details. It's my business card, so my details are there, but you've also got a reminder of when your appointment is with me next. There you go. They're more likely to keep hold of that. Posters, flyers, brochures can work. There's no point in producing flyers, for example, if your market base is specifically aimed at people within a certain location. So you might have something that is aimed at people who are homeowners. So there's no point doing your flyers on estates that are primarily social housing where people do not own the property, because it's the social housing company that you need to approach rather than the person renting the property. So it's wasted putting leaflets in certain areas. Your networking is going to be the biggest one. Networking group, introductions, seeking out referring partners, informal introductions. Telephone canvassing works, but you need to be quite aware. You can't just phone people up cold call anymore. It's illegal to do that, and you need to check the legalities of if you're doing any kind of telephone canvassing and make sure you're working within the current law now. Do you forge partnerships and you encourage referrals? So you might have businesses that complement you. So you refer people to each other. It's all about creating that network for yourself, isn't it? So logos, flyers, and business cards. Really good one, and this is not us promoting it. There's an organization called Fiverr.com, which is basically people from all over the world who could be design students or people who design logos in their spare time. They may do it from a Fiverr, $5, that's where it came from. But they may create a logo for you. It might be £20 to create a logo or different ones. You buy the logo from them, they give you are then allowed to use that logo because they've created it for you. And then you can use that logo anywhere else you want. I'm not a designer, so I might create a logo and people look at it and go, Chris, it's too busy, there's too much on it. You know the Apple logo with the apple being bit. If you have a look at the old Apple logo, I think from the 70s and early 80s, it was terrible. It was Isaac Newton sitting under a tree. It was just like, what the heck is that? but it's about having a clean, what I would say, a clean logo. It's not too busy. The best logos, the best designs, the more simple the design, the better. You just look at Nike, it's a tick. You know, it's not just a tick, it signifies a lot. But what a simple design, and what an effective design that people know exactly what it is. That's what you need for your business. And it's looking at when to use a flyer and when to use a business card, and the content of what is within them. Remember, less is more. Again, people do a leaflet and they want to put every single service that they put in that leaflet, and I look at it and go, oh, it hurts my eyes, it's too busy. So it's less is more sometimes. So it's important that you want customers to know what you do. That leaflet, that business card should encourage them to contact you because they want more information or they want to purchase from you. That's the whole point of a card or a flyer. It creates opportunities. That's what you need to do. Websites, yeah, they're just part of normal everyday life now. However, some businesses use websites more than others. There are free website builders out there, which they give you a template and it's the content that you put in. I'm not a web design specialist. However, when I'm looking at a website, I don't want to see too much text. It's nice to see the text broken up with images as well. It's easy on the eye. It says what it needs to do. I don't want to look at 30 pages of a website. It's too much. So your SEO or your search engine optimization. If you are using your websites, and I hope I'm not preaching to the converted, when somebody searches for your kind of business, you want to make sure you come out top on that search. So it's looking at a website that serves a purpose and it's functional as well. You could look at a website builder, it costs you more money, but then you have a website that's specific to your needs. Registering on other websites, your third party, and your Google Map listings as well. So it's having a website that works. If you've got a website, it's keeping it up to date. I have seen so many websites that nothing's been changed for 2 years. I don't think it's a good image there. We now live in a society where social media is part of our everyday life. So your Facebook, Twitter, Instagram, LinkedIn, lots of them. What are they and who uses them? That's what you need to look at. So you may have a customer base, you may be making cakes, you may be cupcakes. Well, social media, brilliant for that. Because customers can put on reviews, oh, made this cake lovely, look at the picture. The picture's, you know, worth 1,000 words, aren't they? And then customer referrals, because then that's recommendation. How many times have you looked at a website or you looked at a social media and see what the ratings are like? What have people said about that business? Again, looking at the demographics of it and looking at the content management of it. Again, people don't manage their social media. So if you're putting posts on, it's making them interesting or having different kinds of content each day. And touching on that, I mentioned before about Fiverr. Social media should be fun, interesting, valuable, educational, and relevant. So somebody that we know who created a very, very simple posting schedule for in your business over the 7 days of the week. They're saying the problem is people aren't focused on what they want. They just throw random things out, so it doesn't serve a purpose. So each of your days, you have a theme for your posting schedule. So for Sunday, it could be big ideas. That's sharing expert advice or a short quote. Monday is something that is more humorous. So a comic, a humorous image, a meme, or a phrase. Tuesday is an interaction where somebody could ask a question, share a photo, a contest or a quiz, or post a fill in the blank sentence, for example. Wednesday, current news. So sharing positive news about your business, your industry, or your community. Thursday is giving something back. So featuring customers, this is so-and-so, this is what we did for them, and here's their quote. Giveaways, make a coupon, discounts. Friday is a day in the life. So it's photos, it humanizes you, doesn't it? So even if you are just online, by showing people who you are, saying this is a photograph of me, this is what I tend to do in my day. So when you get your products that I make for you, this is the process. And again, it humanizes. People buy, people remember. And then Saturday could be an education. So tell people about your product. What can it do? Teach people how to use that product better. So then what you've got, and it doesn't have to take a lot of time, each day you've got a simple posting schedule. Because some people will come back and look at it every day because it's something different. My daughter does these streaks. I've had one going for 300 days and she has to keep going back onto it every day. How many times do people they get up in the morning, we put something on social media. What have they done? What have they said about me? It's the same with business. You want people to keep coming back to you to think, because they feel as though they know you, they want to know a little bit more. Really nice information, that. Whereas you have a social media, you don't put anything on, people won't look at it because it becomes boring, it becomes mundane. So a big thing as well, which we touched on, is about networking. Now you can tell it's Americanized because it's about developing an elevator pitch. Basically, an elevator pitch is an introduction, who you are and what you do. So there could be local groups, you could have conferences and exhibitions, shows and galas. I know it depends on current circumstances, how things are, but again, your networking is so important. There could be trade or professional bodies that you approach, and more importantly, online forums now. Social media, trade associations, there is a lot going online, there really is. Again, quite funny about online information. Where do the facts and where do the fallacies start and end? And that includes businesses. So it's not about creating a false impression about what you do. It's about showing that you're human, showing that you have a good product or a service that people want to buy from you. It's about being trustworthy. It's about being honest. It's okay to say to a customer, I'm sorry, I can't do that. That's not my field, but I know somebody who does. It's traveling around, isn't it? And that's what you're going to need to do, regardless of what your business is. You need people to know about you. Visiting local potential customers. That could be relevant as well if your customers are other businesses as well. So networking steps. And I'm not here to teach you how to sell, because remember, I'm not a salesman. But an introduction is an elevator pitch. Help others think, how could I help this person or business? It's trust and reputation. What could influence them to have faith in you? What are the right connections? Don't be afraid to excuse yourself politely. So, for example, if you're talking to somebody or somebody in a business and they're clearly not your customer, it's not about being rude. It's about politely moving away because you're wasting your time telling them about your business if they're never going to buy from you. So it's all about planning as well and the next steps. Follow-up is the most important thing. Again, I know loads of people go, oh, I went to this event, it's great, met loads of people. I talked to them 3 weeks later. How did it go? Oh, I've not got round to phoning them. And I say, it's not worth it now. After 3 weeks, you haven't bothered to contact them. Don't. So it's about reliable follow-up and keeping your promises on that follow-up. Be positive, not pushy. I know it's easy to fall into the trap of, I might get a sale here. Think about myself. If I go into a shop and I have a salesperson come up to me and they're pressurizing me to buy, I'm walking out that shop. If I want information, I will ask. Let me make my own informed decisions and choices on buying something. But it's about sustaining your effort. You will get no's. I remember working with somebody and helping them. They had this knack to sell. They just had this gift. They were really good. But they recognized and they said to me, they had to be told no 20 times because that 21st customer says yes. They said, don't take it personally if somebody says no. So what is selling? Selling is the art of making a product or service acceptable, believable, or desirable by the use of persuasive skills. Helping people to get what they want by listening to them and matching your product or services to their needs. So somebody could say, you know what, I'm really after this. It's funny you should say that because I've got this product or this is what I do. And they go, how can you do that? You've got a sale then. They've told you about a problem or an issue they have. You can resolve it for them. So the tools for effective sales, features and benefits. So our products are made with the highest quality materials. They stand the test of time. Your strapline. Elevator pitch. As a business advisor, I help clients to develop a detailed business plan and support the successful launch and development of their business. Managing objectives. Well, I can offer you a package of 5 personal training sessions for £85 under the current special offer. Whereas 1 training session is £20, but if you get 5, you can have it for £85. Again, people go, getting a good deal there. That's what people are looking for. That's what I look for. In a negotiation, don't be intimidated by people. You know what you're talking about. You know your business. You know the pricing of your products. You know that you are good at what you do. But before you started, you've done your research. That could be research on the customer. That could be research on the product. That could be research on how much you're going to sell something for. So you've got an upper or lower limit. I would say to people, try not to be too flexible on what you're selling something for, because remember, if you go too low, that becomes an expected price. And don't be afraid to walk away. If a customer says no, or customer wants something that is just a ridiculous price, they're not your customer. Don't worry about that. And think about that customer. It's about what else you want to gain from that customer. Yeah, you want a sale, but is it just a one-off quick sale, or do you want to develop a working relationship with that customer and you have a working business relationship with them over time, where they buy multiple times from you, they keep coming back to you? It's on the television quite a lot at the moment, where a lot of companies give offers for new customers, not for existing customers. But that attitude is slowly changing, because if you're a dedicated customer, why should a new customer coming in get a greater discount than you? Now, I understand incentives, I understand that, but it's the way it's done sometimes that certain businesses will not look after their current customer base. They're more worried about getting new customers rather than retaining customers. I believe you need a combination of them both. You need to retain a core customer base, look after your customers, because they will repeat buy from you. And also encourage new customers to come in, because if you come with me, this is how I look after my customers. Not, well, we'll give you this broadband at this speed and all this, but after 12 months, we're going to slow it down and charge you more. But the new customers will get the nice fast one. No, everyone should get that. And it's about providing something to your customers and looking after that existing customer base that you have. It is important to keep in contact, because I notice as well, what a lot of people do is they don't keep in touch with their customer base. So when someone has bought a product or a service from you, evidence has shown they are 80% more likely to repeat buy or recommend your service to somebody else. So how will you re-engage your customers? Newsletters, text, phone call. Research has shown if you provide a good service to a customer and they are happy, one good customer could potentially create 3 new customers. And that's good. On the other side, which is quite interesting, if you have a very unhappy customer, you could potentially lose up to 20 more customers. Bad news really does travel fast. If you look after your customer base, it will lead to other customers coming through. And that's something that people tend to forget. They've got a sale, I've got the money from the customer. No, it's about providing that aftercare support. It's like myself as a business advisor. Yes, people come to us on the new Enterprise Allowance Program. There are certain processes that you must go through. Looking at this video is one of them. Working with your business advisor to create your business plan and having a certain number of meetings as well. That could be on the phone, or depending on circumstances, maybe face-to-face. Once you are up and running, we are still there as a resource for you. So it's not a case of somebody sets up and is running the business and we don't want to know them anymore. So again, we are doing the same principle where we've set people up, We look after people. Again, we might not have all the answers, but it's again working with people to help you stay in business as well. You are our customers, so it's about us helping you. What I would suggest, if you do have any questions or answers, please ask your work coach first, and you can also ask your business advisor as well. You will probably have other appointments booked in after this. That could be with myself or could be with one of the other business advisors. It is important that you ask questions, because in order for us to help you, we are going to respond to what your questions and your concerns are to help you come up with those workable solutions. So if you don't talk to us, if you don't communicate with us, we cannot help you effectively in order to get you with a viable business, which is what you want to do. I hope you've got something from the video today. We've got a couple of more slides that we do need to go through. It is important to clarify that your bookkeeping is in order. You keep on top of your bookkeeping. You know where your money has come from, and you know where your money is going to at any moment in time. On your sales and marketing, it is important, again, you have control of that marketing, but it is important that you do market your business effectively. Not everybody comes up with a brand or a logo, but if you're going down that route, it's about an ownership of that logo for you within your business. Remember, you are the business, you are the brand. It is about promoting you in an effective way. And there's various methods of doing that we've gone through today. So what we do like any comments coming back from you in regards to the presentation. Tell us if there's other things that you'd like to see in future videos or future presentations. We do have other videos and presentations that will be available in the future when your business is up and running. We do run online courses as well. That's usually about 2 hours long, run by mentors, and are very, very effective as well. What is important today that you must do? You must email startup@blueorchid.co.uk. You need to send an email to confirm your attendance and watching today's video. You must state your full name, the job centre you attend, and the name of today's session, which is sales and marketing and bookkeeping, and you must put today's date on it, or the date that you watched it. Failure for you to do that will result in you marked as not having attended. So if you haven't sent us an email, we don't know that you've watched this video. So we need that acknowledgement from yourself. Attached to this will be a completed evaluation sheet in regards to this video as well. From our point of view, that's our marketing, that's our promotion in effect. We need to get feedback from the videos. We need to get feedback about this. We need to tweak them at times. We can only do that with your feedback. So to clarify, you must send an email as soon as you can to startup@blueorchid.co.uk. State your full name, the job centre, the date of the session of this video, and today's date. It is important that you do that, because that's an ownership and a responsibility that you have on your part. We have an ownership and a responsibility to you that we will help you develop your business plan to get you to the stage of starting your self-employment. So you should have another appointment with your business advisor. If you haven't, you need to contact your business advisor and maybe arrange another appointment. Remember, you also need to complete your business plan. Within the business plan will be the cash flow forecast that we touched on during the video. And that will show the viability for your business. When you've had the minimum of 3 appointments, watching this video and completing the plan, we will then send you a business plan for approval. And that's to make sure that the business plan stacks up and it is realistic, that it is achievable. Your business advisor does not approve your business plan. That is done independently of your business advisor. Now, as a duty of care, as a business advisor, we will only forward your business plan when we personally feel it's realistic and achievable. But it's always good to get a second opinion on that plan for the feedback. Just like to say thank you very much for watching this video. I hope you got something from it, and more importantly, I hope it's generated questions within yourself. I would like to clarify, try not to panic too much. Some of you may, some of you won't. Don't worry too much about the terminology on your finances. We are here to help and guide you through all of that. Anything you're unsure of, you do need to speak to us. We don't know if you're worried about something, and it's okay to talk. Remember, the conversations with your business advisor are confidential as well. The final thing I want to touch on, as well as us being here to help you develop your business plan, to look at the viability of your business idea, we're also here to look at your well-being as well. So when you have started to trade, we will keep in touch with you on a regular basis. If once you've started, you need to speak to us sooner rather than later, you must contact us because we are here to help you. Mental health and well-being is really, really important for everybody. But when you are running your own business, there can be isolation. There can be times when you feel particularly stressed, worried, or anxious in regards to your business. We are here to help, and please remember to do that. There's no shame in asking for help. Say, I'm finding this difficult to cope with. We are here to help you through that process. So even when you're up and running, you're not isolated and you're not on your own, and you must keep in touch with us. Once again, thank you very much for watching. Really hope you got something, and please remember to send that email. Those of you who are working with me, I look forward to seeing you again. Those of you working with my colleagues, you will be well looked after. That's what we are here for. So thank you very much for today, and best of luck with everything within your business.